Hey y'all, welcome back. In the world of investing, it's common to hear a chatter about the latest high-flying stocks. The ones with momentum already in a full swing. Yet often, these stocks were not the talk of the town when they were truly undervalued gems. For value investors and contrarians, the real opportunity lies in finding companies that are currently undervalued yet performing well, not those that have already peaked in price and popularity. Even sector experiences its cycles of ups and downs. Key is to start accumulating shares from sectors that are either falling or consolidating rather than those and have already seen substantial growth. So this approach helps the investors steer clear of the herd mentality, which can inflate stock prices beyond their true value. Moreover, entering a company simply because it's a subject of widespread discussion can often be a misstep. By the time a stock becomes a hot topic, the market has already likely factored in its potential, leaving little room for substantial growth. Instead, the essence of value investing lies in patience and research, identifying well-performing, undervalued companies before they catch the market's eye. Remember, successful investing is not about following the crowd, but about making informed decisions based on thorough analysis and a deep understanding of market cycles. By focusing on undervalued sectors and companies, investors can uncover opportunities that others may overlook, setting the stage for significant returns when the market inevitably recognizes true value. Hey everyone, welcome back to the channel Mindful Finance, and this is Sundar. Today we are going to dive into a fascinating world, Indian chemical sector. Stay tuned. So today we are going to talk about Indian chemical sector. So this industry, rich in diversity and vital for the economy, has seen its ups and downs, especially with the recent market downturn. But guess what? There's a silver lining as India stands on the brink of becoming a global chemical manufacturing hub, thanks to the China Plus One strategy and a keen interest in specialty chemicals. So what's been happening? In the last few years, Indian chemical stocks took a hit after the COVID-19 pandemic rally. Challenges like Chinese chemical dumping and reduced demand for Western markets have tested the industry. However, there's a buzz about a comeback, especially for specialty chemicals. Not just chemicals, specialty chemicals, which are super important for the growth. Here is the exciting part. The path to recovery looks promising. Experts are talking about a significant growth potential thanks to factors like rising domestic consumption, a shift towards eco-friendly products, and India's competitive manufacturing costs. Plus, the government is stepping up with initiatives to boost the industries further. For those of you looking for investment opportunities, companies with strong R&D and diversified portfolios are looking pretty good. Despite the global challenges, these firms are innovating, adapting, showing great potential for growth. So today we are going to discuss to find out those powerful specialty chemical sectors companies, and we'll delve into or we delve deep into those sectors and find the undervalued stock. Let's get into that. Welcome back. So as usual, we are going to get into the details about finding undervalued stock from specialty chemical key point, and I have made a clear video on finding the undervalued stocks earlier also, but in this video also I'll try to explain the process. Let's get into that. Go to ticker. So today let's discuss how to find the undervalued stocks. So this already have defined, I have already explained in my previous one of my video, and please go back and check. If you haven't checked that video, anyway I'll give a I'm going to repeat that again. So please, this is very important one. Nobody will teach you this particular thing. So because people may talk about the stocks and stock names and other thing, but they won't reveal you or tell you how they found a best stock or undervalued. So this is the method you have to follow. Let me go step by step. So this is a ticker tape. So when you are here, you can see there are total 4,877 stocks. So you have to start adding the filters here. So first one is 1 year return versus Nifty. Type 5. So you'll find 5-year historical growth, then EPS growth, then CAGR. Where is the CAGR? Net profit margin, 5-year CAGR. So these are the important parameters. Then one more is my personal one, which is current company PE minus sector PE. So in the earlier video I have explained how to create this filter. Please, if you have not checked, please go back and check that video. Okay. Still my filter, I have just set the parameter, but filters are not. So now now everywhere you have to go and change from minus we need to find zero, because we don't want the negative growth companies. We want two growth companies. It should have grown from zero to positive in the last 5 years, I want to say, right? So now you see 1109 company. Now we have to check the sectors. So in this, go to material. If you see commodity chemicals, diversified chemicals, fertilizer and agrochemical, and specialty chemicals, these are all part of chemicals. You see 112, but we are going to only specialty chemical. We will get 30. Now from that, what we are going to do is we are going to set market. We want to find a company which are at least 1000 crore in their market cap. We got 17 stocks. Add one more if you want, which is debt to equity. This is just for if you want, you can have. These companies may have debt. We want a strong company. Let's go to 502. You'll get 9 companies at least. These are, if I put 0 to 0, 0 to 20 is the lowest. So you will find this many companies which are less than 20 as a debt to equity ratio. I don't want this one, so I'll just remove this. So I have 17 stocks now. In these 17 stocks, I need to figure out which stocks to go with. If you see, first one is 1 year return versus Nifty. If I sort this one, you see these are the stocks. These are stocks as per the data, they are doing good. Compared to Nifty, 41.45 more than the Nifty's one. So we need to find negative one. So we'll sort other way. So you find minus 57. That means is minus 57 times percentage lesser than the Nifty's performance. If you see Navin Fluorine 55 minus 50, these are very good companies. Their performance also is very good. If you see, but if you see the industry P, the one I have parameter, right? It is 15 times more than the industry P. But we want one which are lesser than the industry P. So these are the lesser than industry P. So you can check all this company and you can analyze those companies. For now, let's take an example of Vinati Organics. Go to screener. If you see, you can check the website from here also. Okay, you can go through what is this company is doing in other. So for now, if you see, it's a 16,000 crore market. It's a debt-free company, and if you see, only thing is it's 7 times than its book value. If you see the P ratio, it is more than its P. But industry, compared to the industry P, it is lesser than the industry. For this P, it is for itself, like it has their own average P, which is lesser than. If you go back and check the past 5 years, you see it is lesser than the 5-year P. So that is what we need to check. If you see the sales are a little bit like going down, and if you see sales wise, it is little bit increasing, right? So that way it is increasing. And if you see the shareholders patterns, like FIAs increased the stake, DAAs has reduced, public has increased. So this is the shareholders pattern. Now if I show you the chart, let's look into the chart. If you check the stock, how it is performing, see from the top how much it has fell around 34%, right? After COVID, you can see how it went, and then it is consolidating. And the other thing is very important thing you have to check is, see, this was the support. Okay, multiple support was there, and it broken that support, and this is the next support level. Okay, if it breaks, there are chance that it may go till, okay, or first it may come till here, and then it first this level, and then chances are there it may come. Okay, so this is just for education purpose. You do your own diligence. I'm not asking to invest immediately on this. Please do your research properly and then plan. So if you see the stock, how it is performing, and let's see the indicators. You see anything odd in the indicator? Based on the previous video which I shown you to find out where to enter and exit. If you haven't checked the video, please check the video and come back and comment on this video. So the previous video I have clearly explained how to find the entry point and exit. So please go back and check. Okay, I'm not going to explain this. So if you see, this is a good time. It looks like a good time to start accumulating this one. And it is, if I go to daily basis, it has making, you can see the divergence. Okay, and it's a good time. You can find a reversal signal is, you are getting a reversal signal, but this is a trend line. If it has to break this trend line to get a good moment. So this let's talk about this company, whether how good it is, right? So if you see, this company merged with Viral Additives Private Limited on September 8th, 2021 in a deal worth about 330 crores. It holds a dominant position in the production of ATBS and butyl phenol with a worth of 65% market share. The products are used in this company's the products are used in various industries such as water treatment, construction, paints and coatings, personal care, and agrochemicals. They export products to several countries including the USA, Australia, China, Germany, and other countries. Around 96% of the revenue came from product sales, with a significant portion, approximately 68% from exports. So they are investing approximately rupees 580 crore in capacity expansion and other improvements. On May 31st, 2023, Vinati Organics invested 6.6 crores in equity shares of Viral Organics Private Limited. So that means they are investor also for the Viral. And they have lot of products coming underway. MEHQ. New products like MUHQ and Guicol through Viral Organics. So that's the one stock I wanted to discuss. And another one more stock I'll try to explain. So don't just jump into the what stock I'm talking about. Instead of that, focus on how I'm evaluating the stock, how I'm trying to understand about the company. So based on that, you make a decision. So let me show you another company. So let's discuss about the next company called Fine Organics. If you see Fine Organics, what is its current status? If you see the Nifty, say it is minus 35, right? And what about the industry PE? It is minus, right? It is lower than industry PE, and it is revenues and other things very good. Let's see, open a screener and check the details. If you see stock PE is 28.2, ROC is 65.3. It's a very good thing. ROE also good. Almost a debt-free company. This is very, very important. But only thing is it is trading almost way high, right? So price to book ratio, if you see 7.7 times its a book value it is trading. It's almost like 4,000 rupees. And face value is 5. That means like it's a good price. If you ask me, it's a good price. Okay. And if you see the company's sales, it has dip in the recent quarter, which is the December quarter. It's constantly like reducing from 760. It is reducing. All these are because of the China dumping their things, so that globally we are facing this problem. You see, expenses got reduced, and the operating profit also is reducing. Let's see the sales wise too less, right? You can see that is the risk. In March 2023, it went very high, then it got reduced. So if you see 5-year growth is 45%, CAGR 27%. So it's a very good company it is. And let's see who are the shareholders pattern. If you see FIA holding 1.07, but right now they don't have anything now. But overall we see there is no change from very long time. 3.78, 3.78, 3.5, a little bit there is a reduction. So DA is also has reduced. Public is increasing. Okay, so that is the potential. Now let's look into the chart. Let's look at the chart. You see the Fine Organic, how much fallen? From here, you see almost 45% has fallen. So that is a very good fall, and you can clearly see it is consolidating, and it is like 3 times it has touched this support. So this is the support level. And if I go and check the indicators, you can see it's clearly it's slowing down, concentrating here, and there are divergence seen in the oscillator. So it's a good time to watch this. Okay, if I go to a daily view, it is recovering from the oversold zone. These are the oversold zone. It's recovering. So just look into this company. It's a very good company. Let's see. Okay, let's see what this company is currently doing. So this company's customer bases are like very diverse, including major companies like Coca-Cola and Asian Paints. The best part is no single customer makes up more than 5% of their revenue. And their product ranges are over 460 products, like spanning food and polymer additives, and emoluments for cosmetics, and additives for rubber and elastomers. If the trends are moving from synthetic to oleochemicals due to their eco-friendly nature, and their distribution network. If you talk about the distribution network, they are broad with warehouses in USA and Europe, and a network reaching over 75 countries. And if you talk about the revenue over the geographic locations, their domestic sales decreased to 39% in FY22 from 45% in FY21, while exports are increased to 61% of FY22 from around 55% in FY21. And their manufacturing facilities are spread across 7 sites in Maharashtra with a significant R&D capabilities. So they are the largest in India and among the top 6 globally in oleochemical-based niche additives, as well as a leader in specialty food emulsifiers. The recent changes include the start of Thailand joint venture and the termination of an agreement with Adotech GmbH. And they are mainly focusing on, as I mentioned, it's oleo chemicals, which means they produce products based on natural components. So now you understood about this company, and I understood how to analyze the stocks, analyze the sectors, find out the undervalued stocks. Hope I have clarified everything over here. And based on that, please do your own research and find a good stock and start accumulating it. And whatever the stocks I described over here are just for education purpose. You do your own due diligence because it's your hard-earned money. You should know where you are spending your money. If you feel that these sectors are not your cup of tea, it's okay. Find the companies which are in your comfort zone. Don't just think or confuse yourself that or have a FOMO behind all this kind of a thing, simply go and invest in ETF. Involve, don't just try to complicate your investment strategies. Hope you like this video. If you like this video, as I mentioned earlier, please share it with your friends, colleagues, and family members. And don't forget to press notification icon. Thank you.